Welcome to TradeTheNBI.com. This is John's report is for March the 14th. Well, that was an interesting day. Again, above the 23%. We talked about pushing to the long side, but then intraday we started getting the readings of the fallout, and boom, it just continued to go lower from there. So plus 50 to minus 50. Another spectacular range day. Of course, there were issues. The rise supposedly was Putin comments about progress on peace talks, but again, none of this changes the realities on the ground as far as oil prices, some of the supply shocks that are starting to build. And again, it doesn't matter how much money you have, if the things that you need aren't available, you've got problems, because if they just aren't getting produced or aren't being shipped because of various supply constraints, because now you have these embargoes of, well, now fertilizer, you've got issues with a lot of precious metals, rare earth metals that aren't going to be shipped, grains, fertilizers, I mean, the list goes on, and making some of these up in an instant demand economy is not possible. It just really isn't. White leading NBI on this with the magenta turnover, and this actually I'll go back to the ES there too. We talked about this. What we were looking for is a sharp decline. We got that decline. It wasn't that sharp, which means in the sense that it's like a strong pivot like here. It's more like a shallow one. So we're going to still see some back and forth, but again, pretty straightforward for us, because below that 42.60, 23% is still biased to the short side. If white NBI leads, that move to the 0% becomes much stronger likelihood. The NQ, you're already reading that, so the likelihood of moving to the zero is exponentially increased, and the fact that we have that orange spike up, of course you need the orange moving up towards the zero range, needs to get above that 7.5, and then also we talked about the potential of steel, so short-term buyers dipping below cyan would be significant enough to really create a much stronger downdraft. Oil, after filling up positive extremes right over here, cut a bit back down because nothing's changed as far as that goes. There's no way to make up that Russian supply in the short term. Europe hasn't banned their oil, but there's no indication now with the gold ban and everything else. Russia at any time, if they feel that they've got an alternative buyer, can move the materials. They're only going to pay their contracts in rubles, and I doubt they're going to do it at the current exchange rates. So will they shut off European oil? In that particular case, there's going to be a mad dash to try and get a hold of any oil that's available out there, because the Biden administration refuses to remove the restrictions that they imposed when they first came into office, limiting where things are. Gold dipped back under the 2,000 and was trading much lower, but again, as we talked about, filling the positive extreme there, didn't quite get to the full dip, but that would be a move back to the 50%. That would be a secondary spur to the upside from that standpoint, and still expressing a little bit of weakness from DOC, dipping below at 25. Definitely weak, but the fact that you have steel coming from negative 17 in this particular case, as soon as it moves above negative 13, you're going to have steel rising from the bottom. That could give you a whole other leg higher. Eurozone, just an abject disaster. I mean, the ECB, as much as they're tough talk, we talked about this before, they're just going to release new structure, new vehicle, as they like to call them, to issue a lot more trillions in debt and just use it to pay off the existing stuff. But the news out of Italy was very troubling. Truckers declared a force majeure, and as of Monday will cease all deliveries throughout the country. So this is kind of the thing that you got to look at that potentially has broader effect, because if that happens in other countries due to the massive price shocks of petrol and that, wouldn't take but a couple of days to cripple food supplies and everything else. There are only a few select regions here that actually grow most of their food locally. I happen to be in one of them, fortunately. But for the rest of the country, you're talking parts supplies, and when you're not getting all the different elements that you need, what are you going to do? And this would be definitely a problem in the U.S. should something like that happen, because you already saw from the Canadian trucker rally that blocked the bridge, the automotive industry was laying off people immediately because just one component can shut down your entire plant if you can't continue. You also saw the same thing with Tesla and some of their price increases, as well as changes they had to make because they couldn't get certain items. So it's just begun. None of this is that far into anything. Treasuries made up a little bit of ground, but still the yield's only going to increase, and we're going to dip, like I was talking about, to that 125 range. White MBI still leads that, so clearly within a sell structure. Certainly it's been in the oversold, but it's just a matter of when we see this shakeout here with rising gold, once that levels off, that's usually enough to stop support of the trend and breaks down from there. So keep an eye out for that. But it's pretty clear that rates have to rise. There's been some talk that if things deteriorate as rapidly as they are, the Fed won't do anything, and that is the counterplay. So that's why some of these things are getting support, thinking that maybe they won't even get a rate increase at all. But even if they increase a quarter point, it doesn't do any good. They could increase at 1 point, still isn't going to help. You're running inflation at, over 20%, even though the CPI is reading 7.9. We already know that if you go back to the original 1980s calculations when these things were done, the inflation is well over that, which is why you see the dollar store going to $1.25 for everything. So that's 25% right there. That's pretty clear indication. In some cases, it's even higher than that. Bitcoin, after the pump, big dip. Some of this has been talk that Russians have been trying to liquidate some of their Bitcoins in that. Volume-wise, you really haven't changed that much. You're not seeing any bigger days than normal. So, the numbers from a volume standpoint are still relatively close to the same. Just scrolling across, if you want to slow it down, you can look at it. But there's nothing special about the volume, so I don't think that's necessarily it. But we've been within this normal 39 to 34 range for some time, and with that secondary move there was the 38 where we had a breakout move from before. So that just clarifies things. And again, nothing wrong with any new buy signals and stuff that come. It's just been predominantly weak because it's been trading pretty consistent to the markets. And again, like I've talked about how much I like ETH from its standpoint. When you get these buy configurations, this one was a little bit soft right here because you still had shakeout below negative 13.5, but the P2 version that took place right here with magenta over yellow on a continuation rise here, that was the beginning of it, and boom, it was a beautiful run, positive extremes throughout, filled it all back in within the same day, which is pretty much what the market looked like. So we had the big run up, took that sale there, then it had the short, which was still a decent short from that configuration, but the turnaround move was pretty quick in there, and it's just a matter of adjusting the code to recognize that special aspect, which is why it's good when those little conversions happen, because an additional thing can add to it. But secondarily, MBI white leading, and then the breakdown kind of holds off on that trade until you get the crossover, but that's because when magenta dips like this but still above yellow, you can have the potential for a turnaround until we had the clear move right there of the cyan DOC over green and orange rising in that case. Look out. And once it broke the 50% line, we were talking about this on the 5K when we were trading in between. It's just a matter of waiting for it to break to that middle portion of it there when we get this oversold, and magenta faded back down again, and that was a clear sign we were headed down. And as long as the white's leading, there's still potential if we break the 23 to head to the 0. So we'll see how that works out for the Hong Kong Open. So this is what that looked like, where we had this monster move. We were 42 and 25, we shot up all the way to 43.25, so that's a 100-point move there in the pre-market, and then just as soon as the market was opening, that was pretty much it. From pre-market open, never got anywhere close to that, and I had marked positive extremes for everyone to see. We had the 4280 from the original, and then coming down 4253, and then previously at the 2325 range. But it was pretty clear by the time we got to the breakdown right here. DSC spread, same time, everything happening, and that was all just about at the 4300 range. It started with the bar, so it was pretty easy at that point, and there was really never any test, and literally it was short size throughout most of that entire move, and it wasn't that huge a day when you think about it. I mean, it's not that far a move, but every time there was a little pop, boom, the dip down, just like always, and just following the paint bar. Turnaround move with blue crossing gray right there. Nice move with 50%, but immediately faded. DSC spread again, and that was just selling all the way through to close. People don't want to be exposed to the long side going into a weekend where it looks like Russian forces have surrounded Kiev and could begin their assault during the weekend, which will only exacerbate the situation. For whatever reason, Zelensky, even despite being asked by the Israelis and that to surrender, and that has chosen not to. And I think that the general belief is that the U.S. thinks that by the time they get into urban warfare, that they'll want to quit and or sue for peace at that particular point. But it's a lot of people to sacrifice for hope. So we'll let that play out. But at the end of the day, nothing's changing with the market conditions, and the only question is, when do the major revisions lower for earnings start, and how much of an expectation for GDP halt do we expect from this cascade event, is what I would call it, as it starts to expand, and particularly if the credit markets continue to be exposed like they were to some of these commodity shocks and the inability to collect from Russian counterparty risk, as well as some of these other investments. There's just a lot of carnage that's out on the table waiting to be collected, and we certainly haven't been at that point where they've recognized the full scale of it. So we'll see how that plays out. As always, though, trade well, and we'll talk to you later.